Bitcoin 42,000 is at a pretty important level that should, like low 40s should hold. Well, yeah, listen, we've had an amazing run in asset prices, right? You look at Tesla became a $1 trillion stock. Yesterday, Apple touched 3 trillion and had a pretty big reversal. You know, $3 trillion stock on like 38 times earnings. And so nothing's cheap. And part of that valuation story has been we had a Fed printing money nonstop. Powell gets reconfirmed, decides he has to act like a central banker. We've had just completely wrong Fed policy, right? They should have tapered a long time ago. They should have raised rates a long time ago. And now we're going to get to that. End of the year, people are starting to sell things. And everyone I talk to feels nervous right now. And so if you look at the Apple chart, broke down yesterday, it looks like it could easily go another 7-8%. Tesla chart looks like it's broken. NVIDIA, these are the three things that were really holding up the market. Those things are breaking down. And we already saw it in crypto. Crypto's come off a lot from the highs. It trades heavy. It doesn't worry me medium term because everywhere I go, I see people getting ready to invest in the space. But just in the short term, I think we could have a messy equity market for the rest of the year and maybe even to the first part of the first quarter. And crypto, I think, could go sideways to down. Bitcoin 42,000 is at a pretty important level that should, like low 40s should hold. We started the year at 30, and so there's been so much of a change in mindset in this space. I was in the Mideast, and two of the biggest pools of capital are starting to get into Bitcoin mining. We just raised a $500 million convert. You saw New York Dig just raised a big round. There's been over 30 billion that's gone into venture. And so much money is pouring into the space. It would make no sense that the crypto prices would go much below that. We went from not being an institutional asset class to being an institutional asset class. And so, but I do think there was a lot of froth, right? NFTs went wild, and while I fundamentally believe in the NFT architecture and that lots of these NFTs are going to retain value, there's lots that won't. And so end of the year, people have to pay tax. A lot of crypto guys are buying real estate. There's a shocking amount of new homeowners that are financing their homes through crypto profits. And so you're seeing some indigestion. It's probably healthy. If you're long, it feels painful, but it's probably healthy. And I think we'll set up next year for a really exciting, kind of future development as these businesses really build out. It's both a risk asset and it's something where people are adding to their portfolios to hedge against the debasement of fiat currency. And if you look at a place like Turkey, where you had really crappy stewardship of the economy, you had from the top down, you've now seen their currency depreciate by over 75% in 3 years. And so in places where the stewardship really gets bad, it's an essential, right? You can buy real estate, you can buy gold. Bitcoin is this generation's version of digital gold, and it really does work to preserve value. It's shocking how many CEOs of non-crypto businesses call and say, hey, how does this work for me? The NFTs were the most important thing that happened this year in all of crypto. Bitcoin, Ethereum, you name it. And it was because it was the first time people said, wow, real world companies are going to participate on blockchains. Like, it was not the crypto sandbox. When we started with DeFi, it was crypto trading against crypto and showing these new ecosystems that you could lend and you could have exchanges and you could have insurance and derivatives, but it was all crypto to crypto. With NFTs, it was the NBA saying, here's a $100 million a year revenue increase that we didn't even know existed. It's Visa who's saying, we're going to have a lot more swipes of Visa per day because people are going to be buying digital goods in the metaverse. It's video gaming, which is a monstrous industry, saying, hey, we're going to have interchangeable parts in our games built on a blockchain. And so NFTs kicked off this idea that crypto Web3 is really the next internet, the next iteration of the internet, and no investor wants to miss that. Crypto is purpose-driven. Like, people come into here because they want to change the world. And it sounds corny, but at its core, this is a revolution, right? It's a revolution of, can we rebuild financial infrastructure in something that's more transparent, more egalitarian, more fair? It's generational. It's Gen Zs and millennials looking up at the generation that's been in charge for the last 30 years and saying, you guys screwed it up, right? From every metric, we went from 40% of debt to GDP to 130% of debt to GDP. We went from an environment that felt okay to now global warming, it feels like the planet's in jeopardy. We went from a population that was relatively healthy to the average man and woman has gained over 30 pounds in the years that the baby boomers have been in charge. And so Gen Z and millennials don't want to deal with the old system.
Is New York the place that happens anymore, especially given Miami creating such big competition, especially in crypto?
I think it's going to. Listen, I've got 3 young kids. They love living in New York. They don't live here, but they're visiting. I have 4 young kids. I'm going to get yelled at, but 3 in their 20s. The city's booming right now, and what we find is all our young people want to be in the office, right? And so this city has been the mentorship city. It's been the capital creation city. It's been the human capital magnet. Listen, it's not that Miami and Austin aren't putting up a fight, but I don't think anyone's going to beat New York. And we've got a new mayor that is crypto friendly.
Yeah, and speaking of him, are you paying any of your employees? I mean, he has made a big push for digital currencies. Are you paying any of your employees like that?
You know, we haven't yet. We've looked into it. You know, there's lots of operational stuff that's easy to fix, but we're certainly going to look into it. Most of our employees, I would think all of them own crypto. I would hope all of them own at least one NFT. You know, you can't be in this industry and not care about it. It doesn't resonate. And so we're hiring people that I used to kid around about wearing a suit one day and a hoodie the next, right? You've got to have the edginess of a revolutionary to be in crypto, but we're also servicing, you know, institutional accounts. And so our job is to kind of take them on this journey, to teach them what we've learned.
Or are you worried at all about some of the excesses that you may be seeing in the industry?
Listen, whenever you have a year like this year, where, you know, Ethereum is up from, well, we were at 1,000 at the beginning of the year, and now it's 3,700. And so people make lots of money, and there's always some excesses. You can see it in the parties in Miami with all the great DJs. Those are short-term signs that things are a little frothy and you have corrections, which we're having right now. It's healthy. I tell every young crypto guy that's made a lot of money, sell some and buy some real estate. Like, no one should have all their eggs in one basket. And so I think you're seeing, like I said, some indigestion of people recycling some crypto profits to buy real estate, to pay their taxes. And I think that's healthy, quite frankly.
Most exciting investments that you have lately that are not as valued, as richly valued as some of the tokens you've already spoken about?
Listen, I think DeFi, right, the decentralized finance space, got unloved this year. Right, if you look at the total amount locked into DeFi, it went from 6 billion to like 250 billion, or even more than that. And you had a DeFi January that was exciting, and then the prices came down, and then people kind of forgot it because the NFT thing was so exciting, because level ones were so exciting. And so I think next year could be the year of DeFi. These are real protocols that are starting to become battle tested that are going to really disrupt traditional finance. What's been holding it back is institutions haven't been using it because of KYC issues. You really want to be careful that you know who's on the other side of the transaction. I think that gets solved in 2022. It gets solved technologically. I think it gets solved with the regulators. In the moment that happens, you're going to see an explosion in DeFi. And so that's my kind of pick for the audience to start buying a DeFi index or looking at the different DeFi protocols.